Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about USD JPY because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by checking the commitment of traders, which is what the non-commercials, so the biggest speculators, so hedge funds in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong area of previous monthly resistance when the market created this red candle here, which then the market managed to break to the upside. At that point, that previous resistance became support. And now the market just tested once again as support this area and is currently rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this zone. We can also notice how, if we look at the movements of the market, we have a clear impulse followed by the start of this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement lining up exactly at this area that we could expect the market here to retrace to. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, what we must notice is that at the moment we are breaking above, actually we have already broken above the weekly structure level, which was this previous resistance turned support here, again here, which now that the market has broken it once again to the upside, is once again acting as support at this level. Meaning that if the market here will go and retest this zone, at that point there is a good probability to see a potential rejection to the upside for the market to reach this horizontal ray, which we have identified by looking at the monthly time frame, which would be the 0.32 of the Fibonacci taken on the monthly impulse to the downside, as we have previously measured. Going down on the daily, what do we have? Now, here on the daily time frame, this is where things get very interesting. Now, first of all, I did speak about USD JPY a few days ago. After the market was creating this impulse, I explained all the reasons for which we could expect this correction and then this move to the upside. That is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, in a situation like this, what do we have and where we could be looking for the next potential setup here? Now, first of all, let's go and see what we have when it comes to the commitment of traders, which, as I was saying previously, is what the non-commercials, so the biggest speculators in the market, are doing. So the big players in the market from an institutional perspective. Now, if we check the JPY, what we can see is that with the last reports, net positions have overall been increased. We went from having minus 46k net positions to now having minus 21k net positions. Now, keep in mind that if you're checking the data for the JPY, you're actually checking JPY USD because all currencies on the spot are traded against the USD. However, if we want information on USD JPY, we simply have to reverse everything, meaning that an increase of the net positions here means that overall the JPY is getting stronger, meaning that USD JPY is getting weaker. Now, this means that there is definitely the possibility for a potential correction lower. And we see that also reflected in the price action. We see the strengthening of the JPY with the market clearly here being trending to the downside. However, lately we went from a downtrend to an uptrend. In fact, we went from creating lower lows and lower highs, which was happening all across this move to the downside, to now creating for the first time higher highs and higher lows. We had a first higher high here, higher low, so higher than this previous one. Now we had a new higher high. At this point, we could expect the creation of a new higher low before then getting more bullish continuation. Why do I say this? Because if we look here what had just happened, we haven't seen any longs added with the last report. We actually see 1.8k longs getting closed. And since we're missing the new reports because they haven't been released yet, what we could expect is more longs getting closed, meaning that overall the JPY is actually starting to shift from a bearish trend to a bullish trend in the sense of the strength. So is shifting from becoming stronger to now becoming weaker, meaning that USD JPY is shifting from being weaker to being stronger. So if, for example, from here, we actually get the move to the downside we would like to see for the retest of that weekly support, that would also create here on the daily time frame an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So if we do get the creation of this M pattern, how we could be approaching a potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential reversal higher, at least for the completion of this M pattern with good probabilities. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that directly from this website, you will have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I at least suggest that you go and check it out, transparentfxtrading.com, and looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.